June 6, 2025. Mahindra's latest New York Stock Exchange educated guesses. Bipolar mentality market, human psychology and investing. Hi, my small elite army of global fans. Currently I'm bullish. Selling may be riskier than buying. Trend is up, and uptrend is your friend. I have a squeaky gut feeling that US Federal Reserve Bank may cut rates sooner than later, deeper than the consensus. US Fed is under intense political pressure and may not escape it. That may catch the market by surprise and off guard, and may lead to the melt-up in next 8 to 20 weeks. Already this year, central banks of India, Korea, China, New Zealand, Canada, United Kingdom and European central banks have lowered their interest rates to stimulate their respective economies. Hopefully, big beautiful bill may clear the Senate in some watered-down form. Corporate deregulations may pick up pace. Tariff fever may subside. Soft rather than hard landing may be in the offing. IPO and merger and acquisition markets are suddenly lighting up. World may become more peaceful. Patient needs all these medications. The doctor and time have to and will prescribe them as soon as possible. The sky did not fall, and New York Stock Exchange continues to thrive, and just about to make new highs, and may march higher in next 4 to 20 weeks. American markets have miraculously come back in full circles. World markets are in par. The highly paid and placed market pundits and gurus are falling once again all over each other to raise the market targets as high as 6,600 on S&P 500 index. Just 8 to 10 weeks ago, most of them were busy lowering the targets to as low as 3,500 to 4,800. What a long-term small investor like me to do? Sometimes I feel without a radar and drift in the world of money without a directional wind. Listening to them may become a health hazard at times. Just like human doctors cannot give any guarantees, these money doctors may not give any guarantees. After all, they are humans, not gods. Let us pardon them. The institutional and small investors have bought the dip to such an extent in past 6 to 8 weeks in V for victory fashion that the dip has given away now to a small hillock. Pessimism, optimism, excitement, thrill have given away to mild euphoria. Market is broadening. How soon irrational exuberance and mania will set in is hard to say. Real estate is reeling, gold is in a rut, cryptocurrencies are consolidating, foreign equity markets follow Wall Street faithfully, more or less, most of the time. On a fundamental basis, American markets are looking moderately overpriced. 10-year treasuries yielding close to 4.5% may not help either. Schiller S&P 500 index, S&P 500 PE ratios, and Buffett market indexes may reinforce my arguments. Fear index VIX has gone somewhat silent. Art markets are eerily quiet. Markets were more valued than now, only 2 to 3 times in last 150 years. But no single index is foolproof. Moreover, many a times equity markets may dance, especially at the extremes, to the tunes of human psychology of greed and fear than the fundamentals. The fundamentals may not mean much when human investors are totally intoxicated with greed, fear, panic, and irrational exuberance. All want to get in and get out of the same narrow gate at the same time, causing catastrophic results from time to time. Small and big investors behave exactly the same way at the two extremes. The total worth of global public stock markets is US $124 trillion, of which US is valued as 60 trillion. India is valued as 5 trillion, Japan as 6 trillion, China as 16 trillion, and the entire European Union is valued as 15 trillion. US bond market is estimated to be valued as US $55 trillion, including government and corporate bond markets. The total global bond market is valued as US $140 trillion. I've been through at least 4 or 5 bear markets since the mid-1970s and at least 2 severe inflationary bouts. I may have now more in my accounts than I had back then. I feel victorious, yet I feel defeated because my dollars buy much less now. I am behind the curve once again. Poor and middle classes may have fallen behind. It is okay with the rich. The dreams of utopian society may be shattered, and we are far too polarized and divided as a society. My fully loaded brand new Impala car costed US $4,000 back in 1973. I felt like the king of the road. Now a similar car costs more than $50,000 US. I feel like a pauper again. The cost of living has inflated at least 14 to 15 times since I migrated to Chicago back in 1972 from India. Yet I have not given up my eternal quest to be ahead of the inflationary curve. To make money, like everything else in life, one has to be more optimistic than pessimistic. I have been more conservative and pessimistic than optimistic most of my investment life of half a century. That may be at the heart of the problem why I never got rich. Maybe it is time for me to adjust my attitude and become a bit reckless. Maybe not. Maybe I may win again. I shall try. But the pity is that now I am on borrowed time. Written, edited, narrated and produced by M.S. Patil from the very heart of Seattle, USA, June 6, 2025. Please start and invest your own money at your own risk. My disclosures. I have no conflicts of interests